Joe Vitale, Vitale Wealth Management, here with this week's graded investment market update. All information is gathered as of the week, November 10th, 2025. Let's get into the week in review. We hope everybody had a wonderful Veterans Day yesterday. This week, major U.S. indexes were ended the week lower, with the NASDAQ down 3.03, marking the worst week since April's Liberation Day, which renewed concerns over AI valuations, but we're not too concerned about that. We still think everything's strong. S&P fell 161, the Dow slipped 1.21. The U.S. government shutdown is now the longest in history, resulting in 2 consecutive missed jobs reports. In the absence of the Bureau of Labor Statistics data, economists and investors are relying on alternative data, such as the ADP figures, which suggest continued labor market softening, potentially paving the way for another federal rate cut in December, which we should see. We should see more next year as well. We know we're way behind on this. Yesterday, which was Veterans Day, the bond market was, and the stock market was, the bond market was closed, but the stock market was open. Upcoming economic release, the key economic data will provide fresh insight into inflation trends and the overall health of the U.S. consumer. Tomorrow, the Consumer Price Index, CPI, will offer an updated look on inflation dynamics. Then on Friday, Producer Price Index will shed light on wholesale price pressures, while the retail sales report, also released Friday, will offer a gauge on customer spending strength. Federal government report could be delayed or canceled pending a resolution of the government shutdown, began October 1st. Looks like there's light at the end of the tunnel. The vote went, so it looks like it's heading over now to be approved. So hopefully the shutdown will be ended this week. We shall see. Talk about market outlook. Earnings season is nearly at its end, with 91% of the S&P 500 companies reporting quarterly results. Of these, 82% have exceeded analysts' expectations, marking the 4th consecutive quarter of double-digit earnings growth. Last week, the Supreme Court heard arguments challenging the administration's authority to impose tariffs introduced in April. While there is no timeline for the ruling, the case adds another layer of uncertainty surrounding trade policy and legality of the current tariffs. Meanwhile, progress toward ending the record-long government shutdown suggests a potential resolution this week, which we should be all done, we hope. Once reopened, delayed economic reports, including 2 missed job reports, will be released, and federal employees receiving back pay could provide a boost to consumer spending. And the reopening would also help ease ongoing travel disruptions, which they're canceling 1,000 flights a day. So that definitely needs to happen. Let's talk about some trading in the G50 portfolio. Last week, with the following changes, the G50 sold off tea, disc, pizza, too many to name. You'll see it in the report. They sold off a bunch of stocks. Remember, we rebalance every quarter in the portfolios. So if we're taking some profits off and on. So there was a lot of rebalancing done last week in the G50 portfolios and other portfolios, which is really good. Stocks in the news, McDonald's, which is owned in the G50 and the Core Select, reported mixed third quarter results, missing earnings expectations. While revenue came in line with forecasts, same-store sales exceeded estimates, supported by companies' continuing emphasis on value offerings. Though management noted ongoing consumer pressure, particularly among lower-income households, but shares were up 1.11% for the week. Qualcomm, which is in the G50, reported better than expected earnings and issued better than anticipated guidance, but nevertheless fell 5.44% for the week amid a broader sell-off. You're seeing a lot of this right now. A lot of concern that we're in the tech bubble with valuations. Is this another dot-com burst? Or we're going to have the big pullback, the big recessions coming. We know we're going to have ups and downs in the market. We don't trade on. We don't let our emotions take over. We're going to be, a lot of us, we do a lot of buy and hold, but we're also making sure we're properly allocated, which allows us to not get too excited when it pulls back a little bit, knowing that we're properly diversified. So depending what news outlet you're listening to, don't get too worked up, but make sure we have a disciplined approach, which is why it's so nice with grading, doing the buying and selling and the reallocating of the portfolios really keeps everything in line. That's it for this week. Thank you so much for being part of the Vitale Wealth family. If you need to get a hold of us, you know the number, 855-756-5700. Visit us at vitalewealth.com. Thank you so much for being here. We'll see you again next week. God bless you. Have a good week.